Welcome to the Great Reset Opportunity Report. My name is Chris Blasi. Today we have a guest with an extensive resume and is a true asset to have on to discuss the scope and magnitude of the Great Reset. This individual has a background that includes investment banking, being an economist, and a lawyer. He has also served in senior positions on major financial firms such as Citibank and Long-Term Capital Management. He has also authored several bestsellers, including Currency Wars, The Death of Money, and The Road to Ruin. He also edits a financial newsletter called Strategic Intelligence. I'm very pleased to welcome to our viewers and listeners, Jim Rickards. Jim, welcome to the show.
Thank you, Chris. Great to be with you.
Thanks, Jim. And you've pretty much answered this question, so I'm just going to kind of summarize it. You know, investors, they have expectations. Sometimes the timing isn't what they expected. And we're talking about really gold investors. Now, for this year, 2018, gold has basically been trading sideways to down. And that's frustrated some people and perplexed some people. You know, what would just be a very, your short message to them as far as those who currently hold gold, what their mindset should be, and those sitting on the sidelines debating whether they should take a position in gold or precious metals?
Well, I think this might be the last call for gold at a reasonable level. You're right. And by the way, the trading sideways, the last 3 months, so August, September, October, it's not just sideways, it's in a really tight range. I mean, with the exception of a couple of small blips, it's trading between 1185 and 1215. Well, that's a $30 per ounce range. And if you center it around $1,200 per ounce, that's a 2.5% range. That's a really narrow range given the volatility in currencies and stocks and everything else. So the last time gold traded in that narrow a range for this long was December 2015. And it broke out. And you had one of the best rallies in gold in 10 years. Gold went from 1050 in December 2015. Gold went from 1050 an ounce to 1360 an ounce just after Brexit. Now it's backed off from there, obviously, but again, I look at that. The last time gold traded in a narrow range the way it is right now, it broke out to the upside and rallied 30% in 6 months. So so I don't see. And when people say gold's not going anywhere, I'm like, well, I'm surprised it's not going down. I mean, real nominal interest rates are going up. Real interest rates are going up. The Fed's on a path to raise rates. They're reducing the money supply. There's a trade war, a currency war. You look at all the factors, and all of them would predict lower gold prices because they're all either deflationary or they make fixed income instruments more attractive to alternative to gold, which which doesn't have a yield, et cetera. And yet gold's not going down. So I'm very encouraged by the fact that it's trading sideways in a world where a lot of factors tell you it should be going down. Now, on the plus side, factors that are putting a floor under gold is simple, good old-fashioned supply and demand. Russia, as I mentioned earlier, Russia has tripled its gold reserves in 10 years. China has tripled its gold reserves in 10 years. Russia's a lot more transparent about it. They're buying about 30 tons a month. That's a lot of gold, as you know. And they've been doing that through thick and thin. From late 2014 to late 2016, Russia's reserves dropped 40%. They went from about $500 billion down to $300 billion. So you had a 40% drop in reserves. But they never stopped buying gold. Not only did they not sell gold, they kept buying gold through thick and thin. When the reserves were going down, they were dumping dollars, treasury notes, U.S. mortgages. They had to lose certain things, but they kept buying gold through the whole thing, and they're continuing to buy it today. So you have to say to yourself, are the Russians stupid, or do they see something we don't? Or that most people don't. Well, I know Russians. I spent a lot of time in Russia. They're not stupid. They know exactly what they're doing. They see the reset coming. They understand the importance of gold in the future of the international monetary system. And they're just getting ready for some kind of shock that most people are oblivious to. So I say if it's good enough for Russia and China, it's good enough for me.
I agree. You know, we say all the time to our clients, believe me, the heads of state of countries like China and Russia have a much better seat at the table than we do. And they're privy to the workings of the world monetary system in a way that we'll never have. So if you're looking at their actions with the data that they're exposed to, it's probably a lot wiser to follow their moves. And from a technical trading perspective, Jim, you're exactly right. When the trading range gets narrower and narrower, a lot of times on a chart it'll look like a wedge.
Right.
When it finally breaks out of the wedge, it doesn't creep out. And this is for anything that's trading, right? Stocks, gold. When it breaks out of that wedge pattern, the move is generally dynamic, robust, and powerful. So I would agree. It looks like it's setting up, right? You look behind the scenes, gold is being accumulated aggressively by some very smart players. You're looking at a pattern that's getting a tighter and tighter range, telling us the probability is a big, robust breakout to the upside, and not in the real distant future, probably in the intermediate to short term.
Yeah, I agree. And so you're right. When you see the wedge and you say, okay, that's a signal that it's going to break out. And then the skeptical investor can say, well, it could break out to the upside or break out to the downside. And that's true. Right. But all the deck is stacked very much in favor of a breakout to the upside. And the reason for that, I mean, just to be empirical, using futures contract data, the short position is at an all-time high. I mean, the hedge funds, when you say smart players, all right, I'll agree that Xi Jinping and Vladimir Putin and Avara Nabiulina and some others have more access to information than we do, but I don't necessarily put hedge funds in the same category as the smart players. They tend to move in a herd. They tend to believe what they read in the headlines. They treat gold like soybeans. They tend not to be that sophisticated about monetary policy and monetary history, and they are massively short. So even a small break to the upside, which is what I expect, could accelerate into like a skyrocket, because they're going to have to cover their shorts. Independent of people who want to buy gold for the right reasons, you're going to have a lot of people buying gold just to cut their losses. So it could be extremely dynamic.
Yeah, and agree. And comparing the insight of a hedge fund manager, not to be mean, I mean, they're very tactical and short-sighted, right? As opposed to China and Russia, who are very strategic, right? So, they're looking at gold and participating in that market with completely different mindsets and resources. So I think we're both on the same page on that, which is going to lead me to my next thing. Gold is used to refer to gold, and sometimes just as a blanket de facto for the whole precious metals market. And we have 4 other very important precious metals: silver, platinum, and palladium. And for the last several years, palladium has been knocking the cover off the ball. I mean, its increase has been tremendous. So even though central banks do not use silver, platinum, palladium as the reserve asset, silver and as a quasi-monetary metal, industrial metal, it is being acquired around the world. Platinum, palladium are industrial metals, but have very interesting dynamics, not only a supply-demand, but the limited places from which it is supplied from. So with all that said, and they do possess some characteristics of gold too, right? They're a store of wealth, they're a hard asset, they're highly divisible, they're highly portable. With all that said, what is your opinion on silver, platinum, palladium? And do you see a place for them within a person's precious metals portfolio?
Right. Well, first of all, Chris, you're exactly right. Gold is a pure precious metal. Gold's actually not good for much except money. I think it's the best form of money, but it has very limited industrial applications. Use it in some there's actually a 5/9 kind of gold that's incredibly expensive, way more expensive than normal gold bullion, that's used for ultra-thin wires in certain telecommunications devices. And they use it to coat the helmets of an astronaut. But it really has very few applications. And we look at the World Gold Council, they show a big slug, almost 20% of gold purchases being for, not for investment, in other words, but for commercial usage. Well, when you look into that, it's jewelry. Sorry, jewelry is a store of wealth. To me, jewelry is just wearable gold. You know, an Indian bride with 20 solid gold chains draped around her neck. That's not decorative, maybe. It looks a little bit that way, but that's her dowry. That's her store of wealth. That's her kid's college education. That's a new house. So that's how they think about it. So I count all the jewelry as the same as bullion and coins. When you do that, there's almost no industrial application for gold, very, very few. So that's pure. Now silver, the other silver, platinum, and palladium, you're right. Silver's another precious metal, but it does have industrial applications, a lot of them. So silver is difficult to analyze because if you look at it as pure money, you're not getting the whole picture because, you know, car sales can affect it and other, as I say, other applications affect it. And platinum and palladium, primarily industrial metals. But interestingly, they do have a lot of the qualities of precious metals. They have all the ones you mentioned, you know, scarcity and uniformity. There are elements. The one I like is they don't rust. In other words, you know, so many things that people put store in actually degrade. They wear out, they fall down, they rust, they wear and tear. The precious metals don't, and including platinum and palladium. The four of them, the group of four you mentioned, are called the noble metals, and the reason they're called that is because they have these characteristics we talked about. So that said, I'm not an industrial expert or an engineer. I can't speak expertly on the use of platinum and palladium in industrial applications, but I do obviously do study the monetary system, and I do you know, study risk and investment management and portfolio allocation, and I understand the power of diversification. And you have a product that is called the precious metals ounce, the PMC ounce, which is a portfolio that when you buy one, it's priced and allocated in such a way. You buy 100, obviously, one would be a fairly small allocation, but buy as many as you like, and you actually get a mixture of those four precious metals in a proprietary mix that you have invented and patented. And I like that a lot. I like the diversification it offers. And you know better than I how it's been performing. It's been performing extremely well. And the reason is simple. There are times when gold goes down, but palladium goes up or platinum goes up. And then there are other times where maybe platinum and palladium are going down and gold's going up. The point is something's always going up, sometimes all four of them, but always at least one or two, sometimes more. And that basically gives you a higher total return with less volatility. It's the holy grail of investing. You know, anybody can get a higher return by taking more risk. Usually the risk you take isn't worth the return. The holy grail is, can I get a higher return without taking more risk, or at least only take risk that's less dangerous than the return I'm getting? And that's you know, beyond the efficient frontier. And you get that from the PMC ounce. So I really like that product for that reason.
Well, thank you, Jim. One last thing, you know, you have such a great insight. You have relationships with refineries around the world, vaulting companies. You know, you really know the nuts and bolts and the nuances of the precious metals world. So a big concern of a lot of investors when they're trying to make the decisions of not only what to buy, what form, but about storage, right? Should I hold it in my possession at my home? Should I use a vault that's insured? You know, what would your recommendation or what would you say to people as far as, you know, once you have these metals, how best to hold them? And also they need to keep in consideration, you know, what is their objectives? Are they saying that when gold hits $5,000 an ounce, they're going to sell? So of course they need to get it back to market quickly. But just what are your thoughts in the area of holding gold and storing gold?
Well, there are a lot of choices. The first thing I tell people is do not put it in a bank, you know, bank safe deposit box or a bank vault. And the reason is it's extremely safe when you don't need it and totally at risk when you do need it. In other words, there's a high conditional correlation between the day you most want your gold and the day the banks are shut. So people are going to be banging on the doors saying, let me in, I want to get my gold. And they're going to say, sorry, we're closed by government order, and we're going through all the safe deposit boxes, and we're confiscating all the precious metals and cash, and we'll send you a receipt. So that doesn't work. You don't want to put it in the bank. Private, secure, non-bank storage is the best. There are a number of reputable vault companies out there. You have to do your homework a little bit. You want somebody who's been around for a while. You want obviously someone who's bonded and assured, good reputation, good references. You want to be able to visit the vault and see your metals. So I'm sure there are thousands of them. I don't know them all by name, of course, but I'm sure there's some fly-by-night operators out there. But if you do a little homework, I mean, you have a vault, very good company. There are a couple other big ones out there. You know, there's Brinks and Viamat and others, Loomis. I visited one of the largest, most secure gold vaults in the world outside of Zurich, Switzerland, not long ago. And I talked to the head of precious metals and said, "How's it going?" And he said, "We're running out of space. We're having to build new vaults. We're acquiring these hollowed out, secure mountain sites from the Swiss Army. The Swiss Army is giving them up, and we're buying them with multiple security perimeters and all that." I said, "Oh, it's interesting." So where's the gold coming from? And he said, UBS, Deutsche Bank, and Credit Suisse. In other words, it's not that there was a big gold discovery or a lot of gold showed up. He said people are moving it from the banks to the non-banks in safe private storage. And so that told me all I needed to know. So my recommendation would be find a highly reputable, seasoned private vault operator, someplace you can get to fairly easily, but not a bank.
I agree. And we've seen the same things, Jim. We've had, we work with a non-bank bullion depository for our clients. We have a very integrated offering, and we've seen the same thing. Very big players who have some big holdings in precious metals moving it out of the bullion banks, vaults, into the non-bank depositories. So, that's transpiring around the world. All right, so I just want to wrap up. Your newsletter, your books have been very informative for people. They've given them a blueprint to really understand the global monetary and financial system. They've been really invaluable to people who are interested in the markets and what's going on in the world. What project do you have going on now? What could your fans expect from you, in the not too distant future?
Well, I'm just finishing a new book, putting the finishing touches on it. It's there's more to getting a book out than just writing it. Writing it is hard and researching it is hard, but you've got editing and copy editing and legal reviews and cover a lot of logistics and associated with that. But the new book will be coming out next spring. Right now we're targeting March. We'll see. I think we'll hit that target. So March 2019. It's volume 4 of the 4-volume treatise on the international monetary system. So volume 1 was Currency Wars, volume 2 was The Death of Money, volume 3 was The Road to Ruin, and volume 4 is called Aftermath. So that's the one coming up. I'm finishing that up now. It should be on the bookshelves or available on Amazon. You can pre-order it now if you like. That should be coming out in the spring. Other than that, continuing research, looking at the what is an implied peg of the gold in SDR prices, not dollars, not yuan, but SDRs, that is possibly being engineered by China. Traveling, speaking, just enjoying life.
Sure. And is there a particular website or anywhere for contact where a person can go to keep up with what you're involved in and to see, maybe how to subscribe to your newsletter or find out when your next book is coming out? Anything with that sort of information?
Sure. My personal website is called thejamesrickardsproject.com. So if you just Google James Rickards Project, you'll find it easily. And then that contains a lot of links to my books and newsletters and so forth. My financial publisher, my newsletter publisher is Agora Financial and the Paradigm Press in Baltimore. They have a very active website. And then, of course, the books are available on Amazon. And I'm also very active on Twitter at James G. Rickards. So I use my middle initial, Rickards, Rickards. So and it's an open account, so you don't have to join Twitter. You can if you want to, but you don't have to join Twitter. You can just Google at James G. Rickards and it'll come up. And I put out a lot of commentary on the international monetary system and monetary policy right there.
Great. Hey, Jim, thanks a lot for coming on our show. You provided us with great insight. We really look forward to sharing this with our clients and other people out there. And we hope to have you again on in the future as we kind of chronicle and track the Great Reset.
Thanks, Chris. I'll look forward to it.
Okay, Jim.